Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. House rules. Please take the time to read important rules for webinar attendees. During the presentation, if you have any questions, feel free to type inside the chat box. And at the end of the today's session, I will answer your questions. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an Forex analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. So, these are the today's session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first important news that I'm going to cover is the industrial production month over month in Europe, and the currency pair we're going to discuss is the Euro USD currency pair. Then we have the unemployment rate in Australia, and we're going to discuss AUD USD currency pair. So let's talk about the first one. On April 15th at 9 a.m. UTC time, we got the news announcement. Industrial production month over month in Europe. The currency pair is euro dollar currency pair. So, what is industrial production M over M? M over M means month over month. Industrial production month over month measures the monthly change in output from factories, mines, and utilities across Europe. It is a key indicator of economic activity. It shows the strength of the industrial sector and its role in GDP growth. Stronger than expected reading usually supports the euro. It signals higher production and better economic conditions. This can push euro USD higher. A weaker result may show slowing activity and weaker momentum. This can put pressure on the euro. Now let's discuss about the financial news event details. The industrial production month over month in Europe, the previous number was minus 0.8%, forecast 0.3%. The actual number we got is 0.4%. Now let me discuss about market context and financial news release outcome. The previous reading of minus 0.8% showed a decline in output. The forecast of 0.3% suggested a recovery. The actual result came in at 0.4%. This was slightly above expectations. So we were discussing about the key drivers behind the move, Actual data came at 0.4%, better than forecast of 0.3%. Recovery from previous minus 0.8%. Improved outlook for industrial activity, positive euro sentiment after the release. Technical and sentiment considerations. Euro USD showed bullish movement after the financial data. Let me show you the price chart of euro dollar currency pair. So this is the daily time frame of euro USD currency pair. And right now you see that price action is kind of trying to rise up over here. Go over to the objects list. So over here you can see that market is basically overall trying to rise up. Okay. The short-term sentiment turned positive in Euro USD currency pair. Forex buyers remained active in the market. The move was supported by better economic signals. Further direction depends on US dollar strength and risk sentiment. Now, the trading outlook. Short-term bias is bullish in Euro USD currency pair. The euro remains supported after the news release. Further upside depends on continued buying interest. Watch for pullbacks if traders take profits. Market focus may shift to upcoming US financial data. Overall analysis and key takeaway is Europe's industrial production rose to 0.4%. This was above the 0.3% forecast and higher than the previous 0.8%. The financial data showed a clear recovery in industrial activity. Euro USD moved higher as market sentiment improved. Final key takeaway is the previous number was 0 minus 0.8%, forecast 0.3%, actual number we got is 0.4%. Stronger than expected data supported the euro, and that was the main reason that euro USD moved higher as confidence in recovery increased. Next one is the unemployment rate in Australia. And we got this financial news event last week on April 16th at 1:30 a.m. UTC time. Now, what is unemployment rate in Australia? The unemployment rate shows the percentage of people who are looking for jobs but cannot find one. It is a key indicator of labor market health and economic conditions. A lower than expected rate usually supports the Australian dollar. It shows strong employment and stable economic conditions. This can push AUD USD higher. A higher than expected rate may weaken the Australian dollar. It suggests slower economic activity and lower consumer spending. Now, let me discuss about even details. The unemployment rate in Australia, uh, and we got the number at 4.3% on April 16th at 1:30 a.m. UTC time. The previous number was 4.3%. Forecast was also 4.3, and the actual number we got is also 4.3%. The currency pair we're going to focus is the AUD USD currency pair. Now, the market context and news release outcome. Let's discuss that. The previous reading was 4.3%. Forecast was also 4.3%. The actual unemployment rate number we got is also 4.3%. So this matched the expectations. And as far as the AUD USD currency pair is concerned, let me show you a price chart of AUD USD currency pair. As far as the Australian dollar is concerned, look at the daily time frame over here. Price action is moving up overall. We can draw a simple trend line over here, which clearly shows an uptrend. Now on April 16th, we got the unemployment rate number, and price action actually rallied up. Okay, so it's an uptrend going on inside AUD USD currency pair. So the AUD USD currency pair moved higher after the news release. This shows the Forex market focused on other supportive factors. The market reaction analysis. AUD USD currency pair moved up after the financial news announcement. The stable data did not create negative pressure on the Australian dollar, so buyers remained active in the forex market. The move suggests confidence in stable labor conditions. The upside move may also be supported by positive risk sentiment. The key drivers behind the move is the actual data. Matched forecast at 4.3%. Labor market remained stable. No negative surprise in the unemployment data. Positive market sentiment supported the Australian dollar, and due to this reason, the price of AUD USD currency pair moved higher after the unemployment rate news release. The technical and sentiment considerations. AUD USD currency pair showed bullish movement after the news release. Short-term sentiment turned positive. Buyers remained in control in the near term. And the way I see the price action of AUD USD currency pair is probably going to rise up even further. This is the weekly chart. Here's the daily time frame. And we can zoom out a little bit. So you can see that overall market is moving up over here. The further direction depends on the US dollar strength and global risk mood. Short-term bias is obviously bullish. The Australian dollar remains supported after the unemployment news release. Further upside depends on continued buying interest. So watch out for pullbacks if traders take profits. We can look at the smaller time frame, like go over to a 4-hour chart of AUD USD currency pair and wait for a pullback. To me, this looks like kind of a pullback, like the way we got over here. And then we can look for potential buy trades. So the overall analysis and key takeaway is Australia's unemployment rate remained at 4.3%. This matched the forecast and showed stable labor conditions. AUD USD currency pair moved higher despite no surprise in the financial data. Market sentiment remained supportive for the Australian dollar. Final key takeaway is previous number was 4.3%, forecast 4.3%, actual unemployment rate is also 4.3%. So that's stable. Unemployment supported the Australian dollar, and due to this reason, the price action of AUD USD currency pair moved higher because the forex market sentiment stayed positive for the AUD USD currency pair. Now let's take a look at global market trends, and we're going to take a look at euro dollar currency pair and US dollar Swiss franc currency pair. So euro USD, go over here. This is the weekly time frame and it looks bullish. You can draw a simple trend line over here. The price action of euro USD currency pair weekly chart looks like We got a nice uptrend over here. Here's another trend line in weekly time frame. Then we go over to the daily time frame, same story. The trend looks up over here. If we go over to a 4-hour time frame, we can draw a simple trend channel, and it looks bullish in euro dollar currency pair. Next one is the US dollar Swiss franc. USD Swiss franc currency pair. The price action of USD Swiss franc, it's overall it's going down. If I zoom out a little bit, this one is the weekly time frame, and we can draw a simple trend line over here. So there's a nice downtrend going on inside US dollar CHF currency pair. Next one is the daily. Now in daily time frame, you can see we got this bullish rally over here. Let me show you something. So this is where we got a move to the downside, a bearish decline, and this is telling me that market wants to go down over here. The price action wants to uh, show us further weakness. Next one is the 4-hour time frame. Inside a 4-hour time frame, you can look at simple all swing highs and all swing lows. So for example, this US dollar Swiss franc currency pair, 4-hour time frame, price action is actually printing lower swing highs and lower swing lows. So to me, it's a downtrend going on inside US dollar Swiss franc currency pair. So downtrend going on inside USD CHF currency pair. That's the way how I see. Market wants to drop over here. Okay. Next, let us take a look at current week macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the Consumer Price Index, also known as CPI. So these are the upcoming news events. So the first one is the CPI, second one is the German flash manufacturing PMI in Europe related to Euro USD currency pair. Let's discuss it further. Today is April 21st, 2026. So tomorrow on April 22nd at 6 a.m. UTC time, we're going to get this financial news event, Consumer Price Index related to United Kingdom. And the currency pair we're going to focus is the GBPUSD. So what is Consumer Price Index, also known as CPI? Consumer Price Index measures the yearly change in prices of goods and services in the United Kingdom. It is a key measure of inflation and reflects changes in cost of living. A higher than expected reading usually supports the British pound. It signals rising inflation and increases the chance of tighter policy from the Bank of England. This can push GBPUSD higher. A lower than expected reading may weaken the British pound. It suggests easing inflation and less pressure for policy tightening. Now, let me discuss about the event details. The previous reading of CPI was 3%. Forecast is 3.3%. The financial data, actual financial data is not yet released, but it is going to be released on 22nd at 6 a.m. UTC time. Now, let me talk about market context and pre-release expectations. The previous reading was 3%. The forecast is 3.3%, showing expectations of rising inflation. Forex traders will focus on whether inflation continues to increase. A higher reading could strengthen expectations of tighter monetary policy. A lower reading may reduce pressure on the Bank of England. Market participants will also watch US dollar strength and overall risk sentiment. Now, why GBPUSD currency pair is going to show us some nice move? Because there are some key drivers for price action that includes actual inflation versus forecast and previous reading, expectations for Bank of England policy, short-term British pound momentum, US dollar direction, and market sentiment. Even small surprises can lead to strong market reactions. Inflation data is one of the most important drivers for currency moves. Technical and sentiment considerations. GBPUSD currency pair may see strong volatility around the news release time. Forex traders often react quickly to the financial data. Market sentiment and US dollar direction will shape the move. Key technical levels may act as support or resistance during the reaction. Now, my bias is somewhat neutral for the time being. The upside potential is there if the inflation comes above 3.3%. This may support the British pound and push the GBP/USD higher. The downside potential is there if inflation comes below 3.3%. This may weaken the British pound and push the GBP/USD price lower. Expect fast price movement after the news release time, so watch the first reaction and possible pullbacks. Overall analysis and key takeaway is UK inflation is expected to rise from 3% to 3.3%. This suggests increasing price pressure in the economy. The result will play a key role in shaping short-term GBPUSD direction. Currency traders should monitor the data closely and react to any surprise. The final key takeaway is the previous reading was 3%, forecast is 3.3%. The actual data is going to be released tomorrow at 6 a.m. UTC time. In simple words, a higher than expected inflation number may support the GBPUSD currency pair. A lower than expected inflation may put pressure on the British pound. Next one is the German flash manufacturing PMI in Europe. On April 23rd at 7:30 a.m. UTC time, we're going to get this financial news release. Now, what is German flash manufacturing PMI in Europe? German flash manufacturing PMI shows the early monthly reading of activity in Germany's manufacturing sector. It reflects production, new orders, employment, and business confidence. It is a leading indicator of economic health. A higher than expected reading usually supports the euro. It signals expansion and stronger economic conditions. This can push the price of euro USD higher. A lower than expected reading may weaken the euro. It suggests contraction and slower economic momentum. I showed you the chart of euro USD earlier. The trend is actually up over here in GBP USD currency pair daily time frame. Now, the German flash manufacturing PMI numbers. The previous number was 52.2%. Forecast is 51.4%. Actual data not yet released, but it is going to be released on April 23rd at 7:30 a.m. UTC time. Now, let me discuss market context and pre-release expectations. The previous reading was 52.2%. This showed expansion in the manufacturing sector. The forecast is 51.4%. This suggests lower growth in the economy, but still above the 50 level. So, Forex traders will watch if the data remains in expansion or drops closer to contraction. A reading above 50 supports the continued financial growth in German economy and overall in European economy. A drop toward or below 50 may raise concerns about slowdown. Market participants will also track US dollar strength and overall risk sentiment. Now, why Euro USD could move? There are key drivers for price action to include actual PMI versus forecast in previous reading, signals about manufacturing strength in Germany, implications for European economic outlook, short-term euro momentum and positioning, US dollar direction and market sentiment. Even small surprises can lead to volatility. PMI data often moves the Forex market quickly. Now, let me discuss technical and sentiment considerations. Euro USD may see sharp movement around the news release time. Currency traders often react quickly to PMI data. Market sentiment will play an important role. US dollar strength can influence the direction of the move. The key technical levels may act as support or resistance. For the time being, my bias is a little bit bullish. The upside potential is there if PMI comes above 51.4 number. This may support the euro and push the euro USD higher. Well, the trend is already, kind of up over here, and euro is trying to rise up over here in daily time frame. The downside potential is there if PMI comes below expectations. This may weaken the euro and push the euro USD lower. So I expect quick price movement after the news release time. Watch the first reaction and possible pullback. Overall analysis and key takeaway is Germany's manufacturing PMI is expected to slow from 52.2 to 51.4. This suggests growth continues but at a slower pace. The result will help shape short-term Euro USD direction. Currency traders should monitor the data closely for any surprise. Final key takeaway is the previous number was 52.2, forecast 51.4. The actual data not yet released. A stronger than expected PMI may support the Euro USD and expect the price action of Euro USD to move higher. Weaker than expected PMI may put pressure on the euro and market is probably going to drop. Now, let us take a look at current week Forex market trends. We're going to discuss the Euro USD and GBPUSD currency pair. So let's go to a price chart of euro dollar. Here's the daily time frame of euro USD. This is the weekly time frame, and it looks bullish. Next, euro USD daily time frame, same story, looks bullish. The 4-hour time frame also looks somewhat bullish over here. And it seems to me market wants to move sideways and then expect further upside in euro USD currency pair. Next one is the GBPUSD currency pair. The forecast is bullish in pound dollar currency pair. You can draw a simple trend line over here. So this is a nice uptrend going on inside GBPUSD currency pair. Inside the daily time frame, Price action is still trying to rise up over here. Can draw a simple trend line, and this trend line is basically supporting the uptrend over here. Next, let us discuss the US dollar Swiss franc. USD CHF currency pair, the trend is overall down in weekly chart. In daily time frame, we got a overall downtrend, and in 4-hour market just keep printing lower swing highs and lower swing lows. So it's a downtrend going on inside US dollar Swiss franc 4-hour time frame. Next, let us discuss spot gold. As far as the gold is concerned, the weekly time frame obviously looks bullish. In daily time frame, we got this drop, a three wave to the downside. So it looks quite possible that market wants to go up first and then expect further weakness in price action of spot gold. So for the time being, gold looks a bit sideways and then expect further weakness in price action. I will take a few minutes now for questions and comments. And if you have any questions or comments related to today's Forex trading webinar, feel free to type them inside the chat box. I will be happy to answer your questions. Okay, got different messages. Good evening, good afternoon, and good morning, depending upon your time zone. Okay, the question was, what is your preferred time frame for scalping? I use the smaller time frame mainly if I am going to do scalping. I usually don't do scalping. Is unemployment rate a credible data? Yes, we can use the unemployment rate. It's a financial news event and it affects the price action of Forex pairs. Okay, I'm still reading some of the questions. There's a question that does AI model expansion for companies also impact price movement? As far as the price action of different stocks are concerned, then yes. As far as the spot forex is concerned, then there's not much impact on the price action of different forex pairs. So let us review what we have learned today. Well, we discussed about the consumer price index, also known as CPI, related to United Kingdom. And then we also discuss about German flash manufacturing PMI. Also, I discussed about EURUSD, GBPUSD, USD Swiss franc, and spot gold. These are the assets to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true, exciting events, trading content, and market insights. If you want to learn more about Forex trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, April 28th, 2026 at the same time. That's all from my side for now. Have a great day and goodbye.